Hello, my name is Melissa Salcedo, and I am the production accountant here at Gemstar. The management team has asked that I put this presentation together to talk about the month's financial statements and highlight positive occurrences as well as identifying the negatives. The main purpose is to show what the current financial state of Gemstar is and how we can structure our internal controls to make improvements on any negatives and provide support to create consistent positive results. In other words, how good are we doing and how can we do better? In this presentation, we will look at what took place this month at Gemstar in a brief summary. We will then take a look at the company balance sheet, the profit and loss budget versus actual statement, and the statement of cash flow, taking a close look at each of these financial statements to analyze where we were successful and where improvements or adjustments need to be made, which will specifically be indicated in the internal controls section of the presentation, and then a recap. This month in accounting showed a high profit margin ratio of 42%, an excellent percent, especially as we are a startup. Profit margin percent can be calculated by the following equation. Profit margin equals net income divided by net sales. Our net income was $4,833.12 divided by $11,400 in event revenue or sales, which equals to 42% profit margin, and we are financially healthy. Our debt to equity ratio is very high at 27%, but that is expected as we are a new small business and just pulled out loans for the company startup. With good budgeting and internal controls, we can easily bring this percentage down below the acceptable 2% within the next several months. To get this percentage, I divided our total debt of $6,853.33 by our total equity of $24,833.12. I'd like to define what our financial statements are and what each one looks like, as well as a breakdown of what they contain. And the first one we are going to take a look at is the balance sheet. The balance sheet offers us a breakdown of company assets, liabilities, and equity. Assets are anything tangible that the company owns. This includes current assets such as banking accounts and fixed assets such as vehicles, as we can see on the screenshot here of our actual balance sheet. Notice the total of assets is the same as the total of liabilities and equity at the bottom. This shows us in balance, as assets equal liabilities plus equity, because liabilities and equity are, in essence, a detailed breakdown of assets. Individually defining liabilities, these are the expenses we owe, such as interest being paid out, credit cards, and long-term liabilities, such as our startup loan. Equity is simply company stock. The profit and loss budget versus actual statement gives us a summary outlook of what money was made and spent, and what profits were earned after the expenses were paid. Specifically, this month's statement. It also shows us how much we were on or off point with our estimated budget for the month. Here's a screenshot of Gemstar's profit and loss budget versus actual for the month. I have circled the following. Our gross profits made totaling $11,400. The total company expenses at $6,566.88, and the variance total from our budget currently showing a negative of $2,666.88. Overall, we remain positive in our net income, although we were under our estimated budget by $2,666.88. This is a small margin to be off by, and it is preferable to be negative here than over budget positively. It is better to narrow down our budget forecast so that we can be as close to what we actually spend as possible. The statement of cash flow is not the same thing as the profit and loss statement. This shows the cash coming in and the cash going out, itemizing each by activity. In operating activities, we had a net income of $4,833.12. But with all of the operating activities that occurred in August, brought us negative $30,146.88. Our financing activities, specifically the $40,000 loan to help our startup, covered this negative and kept us positive in cash at the end of the period. We can additionally improve as we grow in operating, hosting more and more events, keeping expenses to a minimum by narrowing down the budget and collecting monies due from customers. Let's look at internal controls. What are they and how do they help our company? Well, according to Investopedia, they are defined as methods put in place by a company to ensure the integrity of financial and accounting information, meet operational and profitability targets, and transmit management policies throughout the organization. Which ones are best for us and why? There are several good ones, but I've specified 5 that I think will be most beneficial to Gemstar. The first and most important of these controls would be to use a system of checks and balances to ensure that not just one person has control over all parts of a financial transaction. How do we do this? We require that purchases, payroll, and disbursements be authorized by a specific designated person. Separate handling receipt and deposit functions from record keeping functions, recording transactions and reconciling accounts, separate purchasing functions from payables functions, ensuring that the same person isn't authorized to write and sign a check, for example. When opening mail, endorse or stamp checks for deposit only and list checks on a log before turning them over to the person responsible for depositing receipts. Periodically reconciling the incoming check log against deposits. Requiring supervisors to approve employees' timesheets before payroll is prepared. Requiring paychecks to be distributed by a person other than the one authorizing or recording payroll transactions, or preparing payroll checks. Also, if the agency is so small, such as ours, we could require an independent check of work to be done, for example, by one of our board members. We also would require accounting department employees to take vacations, which would allow for a new group of individuals to come in and review these employees' previous statements and work. Secondly, I would reconcile agency bank accounts every month. This would require the reconciliation to be completed by an independent person who doesn't have bookkeeping responsibilities or check signing responsibilities, or require supervisory review of the reconciliation. They would examine canceled checks to make sure vendors are recognized, expenditures are related to agency business, signatures are by authorized signers, and endorsements are appropriate. Would also examine bank statements and canceled checks to make sure checks are not issued out of sequence. Initial and date the bank statements or reconciliation report to document that a review and reconciliation was performed, and file the bank statements and reconciliations. Restrict use of agency credit cards. This is the third item. And verify all charges made to credit cards or accounts to ensure they were business related. Limit the number of agency credit cards and users. Establish a policy that credit cards are for business use only, and prohibit the use of these cards for personal purposes with subsequent reimbursement. Set account limits with credit card companies or vendors. Inform employees of appropriate use of the cards and purchases that are not allowed. Also require employees to submit itemized original receipts for all purchases. Examine credit card statements and corresponding receipts each month independently to determine whether charges are appropriate and related to agency business. Number 4, I would provide board of directors oversight of agency operations and management. This would monitor the agency's financial activity on a regular basis. It would require an explanation of significant variations from budgeted amounts, and review check register or general ledger to determine whether payroll taxes are paid promptly. This would also require document approval of financial procedures and policies, and independent auditors to be present and explain the annual financial statements to our board. And last but not least, number 5, prepare all fiscal policies and procedures in writing, obtaining the board of directors' approval. This would include policies and/or procedures for the following: cash disbursements, attendance and leave, expense and travel reimbursements, use of agency assets, purchasing guidelines, petty cash, and conflicts of interest. Enforcing all of these controls should help keep us on very good track. In recap, using QuickBooks software to manage our company's financial records has provided a means to quickly create our financial statements and analyze them in an effective way so as to predict and forecast future budgets and profits. Using and understanding our financial statements are two very important components to being financially successful as a business. In other words, make the money and make it count. The different budgeting systems offer various ways to go with budgeting, but I feel the most beneficial for us will be to work on a month-to-month basis to see where we are most in need of changes to the budget as we are a new business. The internal controls should help greatly to keep us in balance and limit any errors or fraud in our financial department.